Hi guys. Today we will analyze Mondelez International stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The short-term trend is neutral. The long-term trend is still positive. Support levels are around $61.50 and $58. The next support levels are around $56 and $53.50. Resistance level is around $64. The next strong resistance level is around $68.30. In the last month the stock has been trading between $59 and $63.70 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 9 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 2% per year, for last 5 years. We see that the average profit margin of the stock has been around 13% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 76% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Mondelez Company: bad, average, and good. First scenario. Mondelez will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 2%. Future profit margin would be low, 12%. Future free cash flow to net income rate would be low, 56%. In this case, the fair value of the stock today would be $42. Second scenario. Mondelez will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2.5%. Future profit margin would be average, 13%. Future free cash flow to net income rate would be average, 65%. In this case, the fair value of the stock today would be $55. Third scenario. Mondelez will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 3%. Future profit margin would be high, 14%. Future free cash flow to net income rate would be high, 75%. In this case, the fair value of the stock today would be $69. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.04. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Mondelez International, analysts forecast growth rate around 5% per year in next 5 years, and future P/E around 21. Again, I will use 3 different scenarios for Mondelez Company: bad, average, and good. First scenario. Mondelez will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 2%. Future P/E would be low, 17. In this case, the fair value of the stock today would be $26. Second scenario. Mondelez will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2.5%. Future PE would be average, 19. In this case, the fair value of the stock today would be $31. Third scenario. Mondelez will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 3%. Future PE would be high, 21. In this case, the fair value of the stock today would be $35. As you can see, today the stock is overvalued, $63, even if we expect the company's high performance in future. There is some important information that I want to share with you guys. Number of shares sold by insiders. If you're an investor, it's good to know what the company's owners are doing. By watching the trading activity of corporate insiders, it's easier to get a sense of a stock's prospects. While it's not necessarily a buy or a sell signal on its own, it certainly offers a handy first screen in the search for a good investment. So, corporate insiders sold shares of Mondelez worth $476 million in the last 6 months. Me personally, I don't think that it's a good signal to buy the stock right now. The company is expected to show a very small growth, 3 to 5%, in the next 5 years, and there are some concerns on its financial health. Also, insiders sold a lot of shares in the last 6 months. Based on that, the stock looks too expensive at these levels for me. I need an extra margin of safety with this stock. I may consider buying the stock, if the stock drops to $50. Company's strengths. Mondelez International is an American multinational confectionery, food, holding and beverage and snack food company based in Chicago. The company has well-known brands, Oreo, Ritz, Cadbury, Alpengold, Halls, and other, with substantial sales through grocery and discount stores. It has also seen strong demand in developed markets. The company has an opportunity to grow the brand portfolio. It is also looking to expand business with sellers that are growing faster than supermarkets, including small grocery stores, convenience stores, pharmacies and online. Pricing should get stronger as the year progresses, as the company announced several rounds of price increases across its portfolio and geographies. The company's return on equity of 15% and return on assets of 6.4% are amongst the best of the industry. Its profit margin of 15% is amongst the best returns in the industry. Risks. Running plants and delivering products is more complicated, as a result of supply chain disruptions, cost inflation and very tight labor markets. Once the pandemic recedes, millennial consumers may also shift their focus from comfort foods with a long shelf life to fresh fruit and vegetables. A new generation is also more concerned with ingredients, such as genetically modified organisms, and about nut allergies and gluten. Mondelez competes intensely with other companies, including value-focused stores like Aldi, and the Trader Joe's chain, which is known for unique foods at very low prices. It's amazing how quickly Trader Joe's appears to respond to changing customer preferences with new products. Snack bars including Nature Valley, Cliff Bar, and Kind, which are particularly popular as snacks on the run, when people are out and about, appear to be healthier than Oreo and Chips Ahoy. A sluggish economic recovery may lead price-conscious shoppers to store brands. Currency exchange poses a significant risk for Mondelez, as the company generates more than 70% of its revenue outside the U.S. It could also be hurt by tariffs, quotas and other trade barriers. The company may have some problems paying its short-term obligations. Based on estimates for the next 5 years, the company will show a very small growth in revenue. The revenue will grow only by 3 to 5% on average per year. The earnings per share is expected to grow by 8% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.